In this screencast, we are going to cover the short strangles, identifying the best possible short strangles in the Indian options market, specifically the NSE options available on the National Stock Exchange. Export options is currently in beta. The data in export options is not complete in the sense we're dropping around 30% of the options that are available in NSE and are not being used as part of the analysis, as the data on them is not clean. A production version of the export options will take care of all those issues, but despite this handicap, we have some interesting results with the option strategies in the Indian market. We're going to share them either through the blogs or screencasts. In this first screencast, we'll concentrate on the short strangle, which is one of the strategies that takes advantage of high volatilities. First, I'll give a brief overview of what a short strangle is, and then move on to how we can use expert options to identify the best possible short strangles in the Indian options market. I prepared a two-slide overview of the short strangle. A short strangle is basically selling one out of the money call and selling one out of the money put. When we sell a call and put, we receive premium. So in this particular case, we receive two premiums, and the profit loss graph of the strategy is shown in the diagram. This is a quick diagram I drew for this presentation. The y-axis is the profit loss of the strategy, and the x-axis is the stock price or the underlying price at expiration. As you can see, the strategy remains profitable as long as the underlying stays within certain range, and as the underlying moves out of the range, the position starts making losses. What is the maximum possible profit? The maximum possible profit is the total premium that is received minus the trading commissions paid. When we sell the call and the put, we receive the premium. So the sum of the premiums minus the commissions paid. And we get the maximum profit if the underlying stays between the strike price of the short call and the strike price of the short put. There is an unlimited risk if the underlying swings wildly in either direction. So we need to be mindful of this and take some action so that we don't lose too much with the strategy. One of the things we can look for is pick a short strangle which has a very wide break-even range, and the second one, have a stop loss order to contain the losses. For example, say if the total losses from the position go over 5 to 10% of the maximum possible profit, close the position irrespective of what your market outlook is. So that will contain the losses. Short strangle will benefit from the fall of the volatility. If the volatility is at historically high levels and you expect volatility to go down in a very short time frame, then you can establish short strangle and benefit from the falling volatility. So now we move back to the expert options website and see how we can identify the short strangles, the best possible short strangles. So expert options has multiple features, but for now we'll just concentrate on the short strangle strategy page. We go onto the short strangle strategy page. Every strategy page has a grid at the top which shows all the possible strategies positions that have been identified by the expert options. In this particular case, we have export options giving us 197 positions, and in the first page it's displaying 1 to 25. After the grid, we have the search fields. I will go into the details a little later regarding the search screen. Coming back to the grid, we can move from one page to the next page. Click on the page number and we move to those pages. We could sort the results by any of the columns. The first click will sort it by the ascending order, and the second click will sort it by the descending order. I can move back to the first page, and one of the criteria we wanted is in the short strangle is identify the short strangle which has the maximum break-even range. So by sorting by the break-even range in the descending order, I can identify the strangles which have the widest possible break-even range. If I click the third time, the sorting goes away. So I can sort by multiple fields, one after the other. I could add as many fields as possible in the sorting, and this will be useful in certain strategies. So now in the Indian market, everyone knows that Nifty is the widely traded underlying. Nifty has the largest option volume. In Strangles, it's also good to have European options, as you wouldn't have any mild movements in the underlying could put uh, uh, either your call or put option in the money, and the brokerage may assign the option if it's an American option. So with the European option, you get an extra safety. So in addition to that, Nifty being a highly traded underlying, we would like to see the Nifty Strangles. So what I would do is I will use the search screen to identify the short strangles of Nifty's. I will type Nifty here. So what I'm trying to do is I want to search all the strangles which have a underlying ticker as Nifty. So I'm doing an equal to. I could do a even more complex search, say based on a lost price or a volume, where I could select the comparison criteria, which could be equal to, less than, greater than, or between, and I specify my values in these two boxes. If it is equal to, less than, greater than, I use the left box, and if it's between, I could use the left box and the right box. So for now, I have a simple criteria. I want to see only the Nifty Strangles. So I set the stock ticker equals to Nifty, and scroll down, click on search. So I get three records, three strangles, which are based on Nifty options. I want to also see, I have a set of columns. I also want to see what is the trade date of these, what is the last trade date. So I have the checkbox here which control what columns are displayed in the grid. So I select the stock loss trade date, scroll down again, search. I get the stock loss trade date. It shows that it's November 24th, the Monday. So Monday closing the market close. The time is 4 a.m. This is actually a US time. The beta version of expert options is using the US time zone, but the production version will have the right appropriate market time. So coming back to the strangles, Nifty strangles, we are interested in the strangles with the widest possible break-even range. So we see of the three we have here, the first one has the largest break-even range. So I will jump into the chart and see how this strangle performs.